Very good morning to all of you. So we'll be continuing certain provisions of TDS TCS which we left out yesterday. So we said we'll start with the TCS provisions and then start with today's session on provision for filing return of income. Now, when you talk about this TDS, we discussed various things yesterday. So basically TDS is from what section? TDS is from section 192 to 194Q, right? So we discussed each of the sections. We also discussed about advanced tax. And we are supposed to discuss about TCS. So when we are discussing about TDS, what is TDS? TDS is tax deducted at source. So typically, a buyer, that is a person, we said a payer, payee. So payer when paying to payee, payer when he pays to payee, he deducts TDS. So it will be for service or goods that he has received or purchased from the payee. So typically payer will be the buyer or receiver and payee will be the seller or provider, right? So this is how typically TDS works. So this is what we saw, right from salary to the last section of 194Q, which is about a purchase of goods. Everywhere we are talking about a person paying to another person for goods sold or services provided. So this is what we discussed in TDS. Now this TCS, what is the change? As far as this TCS goes, the word is tax collected at source. So what difference are you seeing here? You're seeing the word deducted, you're seeing the word collected, right? So this is the difference that you're basically noticing in these both. That is, there is a word deducted, there is a word collected. So what do you mean by this deducted and collected? Let's take for collected, it will be a seller sells, right? Sells or renders. Same transaction. It could be similar transaction. When I say same, the concept of the transaction is same. There is a seller, there is a buyer. Either there are goods sold or services provided. So same thing, right? The seller and buyer. But here, what did we say? In TDS, we said buyer deducts. Buyer deducts when remitting to. Here, seller collects. When buyer pays, seller collects TCS. So which means it's a seller's responsibility. What? TDS is buyer's responsibility. Whereas TCS is what? Seller's responsibility. So that's the basic difference between TDS and TCS. So TDS, as we said, it is deducted by the buyer. TCS is collected from the seller. There are various sections pointed out in your income tax about this provisions. So what are they? We'll see the provisions of TCS. So first thing is, it is for selling various products. What are they? It is about alcoholic liquor, 10-2 leaves, timber, other forest produce, scrap and minerals. So these are the products covered. If you actually see, most of them are probably something which government do not want to be sold much, or typically it is in some way or other affecting the environment or to safeguard the environment. It could be something of that kind. So if you see all of this, it is either to protect or safeguard the society as a whole, the environment as a whole. So that's what we are talking about. For example, scrap, alcoholic liquor, all this are probably, they are not actually good for the society as a whole. So this could be the list of items. So they are saying that if you are dealing in such transaction, collect money from the seller, because we do not know what the seller is going to do after collecting it. That is after buyer is going to do after buying the products. So better collect it now itself. So this is also a concept of advance tax for the purpose of making sure that the tax revenues are collected in advance. So what are they doing? They are collecting tax at source when alcoholic liquor is sold, when tendu leaves are sold, when timber is sold. So other forest produce, scrap and mineral. So these are the things, and these are the rates, respective rates for each of this. Okay. So from 1%, there is 2.5% for certain and 5% for certain things. So this is the rate specified for a seller. So a TCS is categorizing the collection mechanism as different set of collectors. So the first concept of collectors we are discussing is seller. Okay, they are sellers. So what are they selling? If they're selling these products listed here, from alcoholic liquor to minerals, if they're selling those, they'll have to collect from the buyer. We'll see a small example. So we'll take an example where there is, let's take Kingfisher. Kingfisher is selling alcohol to, let's say, some organization, let's say a bar. Okay, we'll take a bar. So Kingfisher is selling alcohol to a bar. What government says is, what income tax says is, when you are selling, if you are selling for, let's say, 50 lakhs rupees, 50 lakhs, when you are actually debiting, what does TDS says? TDS says credit or payment, right? So what will TCS say? I guess it's a very simple question, right? So when you say credit, the opposite of credit is debit. When you say payment, opposite of payment is receipt. So during debit or receipt, whichever is earlier, collect the taxes. So what is it for alcohol? It is 1%. So when Kingfisher is receiving, it will receive 50 lakhs plus. So this is plus how much? 50 lakhs into 1%. So this is what the Kingfisher will collect from the bar on behalf of. So this 1%, this 1% will be remitted to government, okay, as TCS. So similar to what we saw in TDS, it will be remitted monthly. A return will be filed quarterly. Same what we discussed in TDS is applicable, just that the forms change, just that the terms change. Otherwise, everything remains same. So they'll have to pay it on a monthly and file a return quarterly. So now this will be remitted to government. What did we say happens after this? Whatever is remitted will come as credit to this person. So will go as credit to this person as far as this. So this is what the thing is about. So when you say TCS is collected from the buyer at the time of debit or receipt, whichever is earlier, at the specified rate of each of the product listed. Such amount collected will be deposited in the government on monthly basis, and a return will be filed on a quarterly basis. So this is what TCS is about in the respect of seller. Now, as I told you, it is extra, right? Whereas in TDS, what do you do? Is you reduce, right? So in TDS, it is you deduct. So that is you reduced. You don't add. So here it is adding. So you add and collect. So additionally, you collect 1% from the buyer, so that you are reporting in his name. So that will go into credit of him. So now the next category is licensor or lessor. So what is basically a licensor or lessor? One who is running this parking lot or toll plaza mine quarry. Okay, so they are running it as a business. So there is a lease or license provided for any parking lot, a toll plaza, or a mine or a quarry. So for these businesses, you have provided a lease or license. So whatever money is collected as lease fee or license fee from that person who's going to run this parking lot or the toll plaza or the mine or quarry, 2% has to be collected. So this is what will be collected. So basically, it is similar to what we discussed above, but here it is between a licensor and the licensee. Okay, instead of seller and buyer, we are saying licensor and the licensee, lessor and the lessee. So that's the basic difference. So the overall concept of the content or the structure of the provision remains same. So there you said seller, buyer. You are saying lessor, lessee, or licensor or licensee. What license is being transferred? License relating to parking lot, toll plaza, mine or quarry. So that is transferred. So you collect 2%. When a licensor is selling the right, I'll take a basic example. You have this toll plazas, right, in national highways. So whenever you travel in national highways, you would notice toll plazas periodically, every 30 kilometers or whatever, you will have a toll plaza. Now in this toll plaza, the government will authorize someone to collect such taxes, right? So that person, when you say government is the licensor. It is licensing to that particular authority, the infrastructure company or whatever. So now, when government is selling the license, government collects 2% from the person who is going to collect that money from the toll plaza. So the rights for running the toll plaza, that company will provide to the person who's providing the right. So that's what it is. So lessor, lessee, or licensor or licensee. So that's how it is, 2%. And the third one, it is about motor vehicles. So whenever a motor vehicle is sold, which is more than 10 lakhs, TCS has to be collected at 1%. The concept of this TCS is, for at least for motor vehicles, let's assume, when you have the capacity to buy a car of more than 10 lakhs, why don't you pay tax on that now itself? Because whatever 10 lakhs you have utilized for car will predominantly be from a loan, from an income source or something, right? From an income source or loan source, which means you have the capacity to earn that much money. So you pay tax now itself. So that is what it is there. So consideration of motor vehicle. So typically, probably when I say this, I will add one more thing. TCS is for expenses. TDS is on, let's say, income. Okay, so when you receive an income, tax is deducted on income. When you make an expense, tax is collected apart from that. So it is typically for income and expenditures only. So now in this motor vehicle, there is a provision which says when a buyer is purchasing a motor vehicle for more than 10 lakhs, tax needs to be collected at 1%. So what happens? Let's say I am buying a car from, let's say, whatever brand, we'll refer Hyundai. So you have a car, Hyundai dealer, okay? There is a Hyundai dealer. Now, let's say I'm buying a car of 13 lakhs, okay? I'm buying a car of 13 lakhs. Now, when I'm buying a car, I will pay, right? I will pay 13 lakhs. When I'm paying, government says plus 1%. Pay plus 1%. So what do you do on that 1%? So typically, it will be how much? 13,000. So I will pay 13 lakh. It's 13,000, right? 13 lakh, 13,000. So I will pay 13,000 as 1%. Hyundai will deposit. 13,000 to government. File return. So they will report the thing. And then finally, what will happen? It will come to credit of me. So it will come to my credit. So quarterly return will be filed and the credit will come to me. The 13,000 will come to me. So whenever I'm filing my return, I'll utilize this 13,000 as credit. So this is what is there. Now, there is various FAQs in your material. So I'm not going to discuss each of the FAQs. I'll tell you whatever probably which is very relevant for your understanding of TCS alone. So this motor vehicle, as we said, it is more than 10 lakhs. The question comes, is it with taxes or without taxes? It is with taxes. If it is more than 10 lakhs, we'll have to collect 1%. And then the next point is, there could be various scenarios, right? There could be various scenarios where, which is what happens is Hyundai will sell to distributors, right? Hyundai will sell to distributor. Can government say collect TCS on all the sale? They'll be selling crores and crores of cars, right? So can government say you collect taxes from everything? So now this distributor's role is not actually, is in the business of trading cars, is in the business of trading cars. Trading cars. So income tax department, income tax act says, don't collect it from them, don't collect it from them, collect it only from the end buyer, collect it only from the end buyer. So when end buyer is buying from distributor, apply it, because the point here is whoever is making an expenditure of buying a car is what we need to collect taxes, not whoever is doing the business of dealing in cars. So it is not applicable. This motor vehicle provision is not applicable for distributors. So it is not applicable for distributors or dealers in cars. So it is not applicable for distributors or dealers in cars. So that is about motor vehicle. So that is the one which is given here is all the sub clauses. 206C clause 1, 1C, 1F. The next one is, there is new addition recently from 1st October 2020. So from 1st October 2020, there are these two new provisions. What are they? You have 1G and 1H. So what is 1G? It is relating to overseas remittance. It is relating to overseas remittance. So what is overseas remittance? If you are sending money from India to outside India, you will be sending money through a person called authorized dealer. Authorized dealer. It could be a bank or any other institution through which you actually transfer money. So this authorized dealer, if he is receiving amount from a buyer in excess of 7 lakhs. So if he is actually receiving money from a buyer in excess of 7 lakhs, then this particular thing, TCS provision gets applied. So what is the provision? When you are receiving in excess of 7 lakhs, on that excess, apply 5%. On that excess, apply 5%. So that's the provision of authorized dealer. So when an authorized dealer receives amount from a buyer of excess of 7 lakhs, on that excess, collect 5%. Similarly, if there is any money obtained for pursuing higher education, loan obtained from for pursuing from higher education, for which you are making remittances, on that remittances it is 0.5%. On that it is 0.5%. So if it's a normal foreign remittance, it is 5% on excess of 7 lakhs. If it is relating to a loan obtained for pursuing education, then on that amount it is 0.5% in excess of 7 lakhs. So that is 0.5% and 5%. The next category of this is seller of an overseas tour program package. So you're paying money for traveling abroad, foreign travel abroad, for which you are paying to a package, a tourist. You're paying to a tour package provider. So when you're paying that, whatever is the package cost, you need to pay 5%. You need to pay 5% on the overseas tour package cost. So that's what it is about. So that is relating to overseas remittance. What does overseas remittance say? One is, it is relating to foreign remittances to an authorized dealer for other than loan pursued for education. When exceeds 7 lakhs, it is 5%. For as far as your loan obtained from financial institution for education purposes, it is 0.5% needs to be collected. So if 10 lakh is paid by the authorized dealer, 7 lakhs. If a person, let's say a person pays 10 lakhs for forex transaction, to an AD. Now, when amount is being paid, it will be 10 lakhs plus 3 lakh into 5%. So it is on excess. That is, how does this 3 come? It is 10 minus 7. So on that excess, you pay 5%. So this 7 lakh, above that is what you collect 5%. Similarly, for loan and education, it is 0.5%. So for seller of an overseas tour package, it is 5% on whatever package cost that you are paying. The next category is sale of goods. Remember, we saw section 194Q. 194Q, we said when purchase of goods, buyer deduct TDS. Here, seller collects TCS. This provision was initially applicable, but moment 194Q comes, probably the applicability of this 206C clause 1H is reduced because the primary importance is given to 194Q. So the importance comes to 194Q. So we'll see a situation. We said Apollo sells tires to Maruti. Okay. Now they are selling. 206C 1H says if Apollo's turnover is greater than 10C, Apollo's turnover is greater than 10 crore and it sells to Maruti for more than 50 lakhs, then on that excess, collect at 0.1%. So in case if it is actually selling 2 crores, Maruti while paying will pay 2 crore plus 1.5 crore into 0.1%. How did this 1.5 come? It is because it is 2 crore minus 0.5 crore, that is 50 lakhs. So on this amount, 0.1% is provided by Maruti to Apollo. This is 206C 1H. Okay, this is what the provision is. But what does 194Q says? 194Q says, same example, when Apollo sells, they just use the term when Maruti purchases, if Maruti's turnover is greater than 10 crore, then anything above 50 lakhs at 0.1%. Okay. So when Maruti pays or credit, okay, pays or credit, it will actually do, let's say the transaction is actually 2 crore. So Maruti will pay 2 crore minus what? 1.5 crore into 0.1%. 0.1%. How did this 1.5 came? 2C minus 50 lakhs, 0.5 crore. So this is how 194Q TDS is concerned. So if you actually see it is minus, see this, it is reduced because that is TTS. What do you do here? You do plus here. So what is plus here? Because it is TCS, you collect. So now this is on receipt basis. Whatever amount collect, including GST, including taxes, whatever amount is received by Apollo, on that they'll have to collect 0.1%. But here it is, this provision is on credit or payment, whichever is earlier. Now, when they are actually crediting on payment, they pay what? Here we said it is including GST. TDS provision says it is excluding GST. So that is the difference between 194Q1, 206C1H. With that, we are done with this, what you call the TCS provisions. I'll just see if there are any questions on TCS and then answer. (194P, Q and O). Yeah, see, typically what P we said for specified senior citizen, A specified senior citizen will not require to file tax returns, that is, who are more than 75 years old, who are receiving only pension income or receiving only pension income and interest income from the same bank. If that is the case, then return needs not be filed for that assessee. For that assessee, bank will deduct the actual TDS at the end of the year. So whatever income is actually earned, so they might be receiving pension plus interest from same bank, okay, and the person is greater than 75 years, okay, is greater than 75 years. Then in that case, bank, that is the bank, this bank, which is going to give them the pension and the interest, will deduct at rate in force on total income. So that's the provision of 194P. 194Q I just explained. So that is 194Q. And 194O also we had discussed yesterday. So whatever we discussed is as it is applicable for that thing. So that is about 194P, Q and O. What will be the rate for a transporter not providing furnished PAN? So whenever you have not furnished PAN, 206AA applies. That is a rate in force or 20%, whichever is higher. So typically it will be applicable at 20%. Whether TDS and TCS can be levied at the same time? No, it can't be levied. It can't be levied at the same time. Yes, you're right. It can't be levied at the same time. TDS on generally on provisions which TCS is applicable, TDS will not be applicable, and the reverse also is there in some case. For example, 194Q says if TCS is already there, TCS is already there for that transaction, then 194Q does not apply. For example, 194Q does not apply. That is, does not apply for TCS sale. That is your alcohol, timber leaves, scrap, etc. For all these, your TCS is not collected. That is 194Q is not applicable for these sections. So that's it about it. And then what else? Yeah, TCS and TDS can apply to a same person, but not for the same transaction. So that's what it is. So this is how it is. For the advance tax is typically, as I told you, some of you wanted to explain me advance tax again. As far as advance tax, you need to pay taxes in advance in 4 quarters. It is 15th June, 15th September, 15th December, 15 March. So this is 15%, 45%, 75%, 100%. So that is advance tax. So this is not applicable. The advance tax is not applicable for certain persons. That is, your tax is less than 10,000, or it is a person, senior citizen resident. Of course, when you say senior citizen, it is always resident with no business income, no PGBP income. So for this person, advance tax is not applicable. They need not pay advance tax. And for 44 ADA and AD, that is for presumptive taxation, it is only one transaction, that is 31st March. Okay, that will be the only thing. And for incomes like your capital gain, first time business, dividend, it is applicable from the next installment. So the transaction would have happened on a particular date. It is applicable from next investment. So that's the thing. It is 75 years or more. So which is basically if they have attained 75 years at any time during the previous year, the provisions, they become a specified senior citizen. Again, a question on 194Q. As I told you, 194Q will not be applicable on these transactions. That is wherever TCS is applied or any other provision of TDS is applied. So if the TCS is already applied or TDS is already applied, then on that case, this 194Q is not applicable. Okay, with that, we'll move on to the next section. That is the return of income. The return of income is what we'll be discussing today. So just to understand what exactly is return of income, you have been earning income across the year. That is, let's say in previous year 21-22, from 1st April 21 to 31st March 2022, you would have earned various incomes. This income needs to be declared and reported to the income tax department. So the income and the tax should be reported. So this is called return of income. For this return of income, there are prescribed forms. Like you have ITR 1 to ITR 7. So it varies for various assessee, it changes. Okay. So typically for an individual and thing, it is ITR 1, and there are various cases. Okay. So for depending upon the assessee, each of the forms will vary. So from ITR 1 to ITR 7, it will depend upon the income, depend upon the person. So various assessee and let's say income. Okay, so this is what you call as this concept of this. CBDT will notify these forms for that particular year, whatever period is there. Mostly what kind of information, the basic information will be filed is, you will be giving details about different debts. That is, what are the computation of salary, what are the computation for house property, business or profession, capital gain, income from other sources. So you compute each of this income, bring them together and finally show that this is your gross total income. You furnish what are all the deductions that you are claiming, what is your total income, and what will be your tax payable. All this is what you are actually going to furnish in the return of income. Now, when you say you need to report this income, when you need to report this income, we need to understand for whom all this is applicable. Is it mandatory or is it voluntary? For whom it is mandatory, for whom it is voluntary. So this is what we need to understand as far as your provision goes. So this compulsory filing return. So for certain people of persons, for certain persons, it is mandatory, it is compulsory to file return within the due date. So it is important to file within the due date specified. So who are they? They are companies, firms, and for every other person, it is applicable if their total income exceeds basic exemption limit. When you say basic exemption limit, let's say it is 2.5 for regular citizens, senior citizen is 3 lakhs, and for very senior citizen, it is 5 lakhs. So these are the limits. So if the income is more than this, if the total income is more than this basic limit of 2.5 lakhs, 3 lakhs, or 5 lakhs, depending upon the person, then they need not file their return. But there is a small change in understanding of what total income is about. Total income is basically, it is before providing deduction under capital gain exemption. That is, you claim capital gain exemption under section 54, 54B, 54F, 54G, right? So all these deductions, you need to adjust it before claiming that exemption, and your chapter 6A benefits. That is your ATC, ATD, all these things. So before adjusting these, so typically it is like not even your gross total income, because gross total income is after adjusting capital gain exemptions. So this is gross total income before claiming this capital gain exemption itself. So that's what the provision says, the total income before providing deductions, exemption under capital gain and deductions under chapter 6A. When you say total income, it does not include your income alone. It also includes the clubbing income for which you are actually assessable. So for any income the concerned person is assessed, that income also should be included. So it is including clubbing of income. It is including that person income. Sometimes you might not have income itself. You are only responsible to file return for someone's income. So in that case also, that someone's income is what you're going to consider and see whether it is crossing the exemption limit. So it could be, in case of your personal individual return, it is your income and clubbing. In case if you're a legal heir or something which you're filing separately for a person, then in that case, that person's income, if it is crossing this basic exemption limit, it will be taxable. So typically, It is compulsory for company, firms, and persons who have income more than basic exemption limit. Such income is before claiming exemption under capital gain and before providing deductions under Chapter 6A. When you say income, it also includes for the persons where their income is taxable in your hands. So that is also included. So that is about compulsory filing return of income. Now, what happens here is typically you have compulsory filing of return. When you say compulsory filing of return, in some situations you are supposed to file return for certain people for whom you are beneficiary. So we'll see what exactly the provision says. For resident and ordinary resident, who's not required to furnish return under section 139, which means when a resident, ordinary resident, you're trying to say these are persons whose income is less than 2.5 lakhs, 3 lakhs, or 5 lakh, as the case may be. For such person, they need to file return. So if such person holds any asset outside India, including any financial interest in entity. What do you mean by financial interest? It is like you have a shareholding capital. So you have invested money into an entity. So shareholding. So asset means both the asset and the equity shareholding or what any type of investment you have made outside India. So it includes financial interest also. So financial interest in any entity. So that is what you're calling as the person. When you say this person, it also includes beneficial owner. So now we are talking about foreign asset holds foreign asset. When you say foreign asset, it includes asset that is non-financial and financial interest. Financial interest in an entity. So what do you mean by financial interest? It could be equity, it could be loan, or any other form of security. Okay. So if there is any financial interest in a particular entity, then they say it is included. When they say holds, they say self or beneficial owner. So when you say holds, it includes beneficial owner. So that's the first segment. The second segment is if a person has signing authority. In any account located outside India. So if he has some form of bank accounts or something or a company in which he is a signing authority, so then also he must mandatorily file return of income, even if he does not satisfy the mandate requirement under section 139(1). The third segment is a beneficiary. The first segment we saw beneficial owner. Here we are saying beneficiary of an asset located outside India, including any finance. So he can be a beneficial owner or a beneficiary. Now the question comes, what do you mean by beneficial owner? What do you mean by beneficiary? So typically a beneficial owner refers an individual who has provided directly or indirectly, so who has provided consideration for the asset for the immediate or future benefit of himself or any other person. So typically a person has invested money, but he is not directly doing it. He is doing it through some other source, but it is for his benefit or someone's benefit. So that is what you're saying. So typically it is like, let's say Mr. A, he invests in company A Private Limited. Okay. Now this A Private Limited invests in A Inc. Okay. In this A Private Limited, there are two directors, Mr. A and Mrs. A. Now, whatever investment Mr. A has made into A, it is actually, in reality, it is Mr. A who has invested in A Inc., whereas it is through A Private Limited. So if there is some form of benefit accruing then Mr. A will be called a beneficial owner. Mr. A will be called as a beneficial owner. So that is beneficial owner. So what is beneficiary? An individual who derives benefit from the asset. So it is the individual who derives benefit from the asset during the previous year, and the consideration for such asset has been provided by any person other than such beneficiary. Now, the person who has actually invested is A Private Limited only. The person who is actually invested is A Private Limited only. But who is actually enjoying the benefit? Who is enjoying the benefit? It will be Mr. A or Mrs. A, right? So a beneficial owner could be someone who's invested directly or indirectly into an asset for his own benefit or someone's benefit, or it could be a person. When you say beneficiary, it could be a person who's actually enjoying the benefit because of such investment. They have not invested. Let's say I am not invested. It is my spouse who has invested, but I am the one who is enjoying the benefit. Then I become the beneficiary. My spouse, since she has invested, she becomes a beneficial owner. She might be the beneficial owner or registered owner. When you say registered owner, you are the legal owner. It is in your name. In the records, it is in your name. But when you say beneficial owner, you are actually not the owner, but it is you who have funded in a manner that your name doesn't appear. That's what you're saying. So typically, let me repeat, a beneficial owner is a person who has invested into an asset, who has put money into an asset, where it is not directly through that person, so that the person's name does not appear as the legal owner or the registered owner, but still it is for the benefit of that person. Then they are called as a beneficial owner. If someone has invested for the benefit of someone else, then the someone else is called as beneficiary. So that's the difference between beneficial owner and beneficiary. So a person who is resident and ordinary resident needs to file the return if they are a beneficial owner or beneficiary of assets held outside India. It includes financial interest. Or if they are a signing authority, they are a signing authority of any account located outside India. So that's what this provision is about, beneficial owner. So now moving on, they will not be called as beneficial owner. There is an exception to this. So this provision will not be applicable. So holding asset of the beneficial owner, it will not be applicable if income arising from such asset is includable in the income of registered owner itself. So in our example, if A files return, A Private Limited files return, then the concept of beneficial owner does not come, because the person who's receiving income from such asset, who's basically a registered owner, is already filed the return of income. So if income arising from such asset is includable in the registered owner, so it is already part of A Private Limited. A Private Limited has filed their return also, then they will not be called as a beneficial owner. That is, Mr. A and Mrs. A will not be called as the beneficial owner and the beneficiary. So that's what this provision says. So this will not be applicable in case where the real owner, the registered owner, has included that income of such asset and filed the return of income. So that's what the provision is. So typically, there is one more situation where even though you are not required to file a return of income, it is compulsory to file the return of income. So what is that? It is basically such person, anytime during the previous year, has deposited in current account more than 1 crore. So if they are depositing in current account, if they have multiple accounts, it is aggregate. If they have one or more accounts, then it is aggregate, which needs to be considered. When you say current account, it must be maintained in a bank account or a cooperative bank. And the next category is if you are incurring foreign travel expenditure more than 2 lakh in a previous year, you need to file a return. The expenditure could be for self or any other person. They have not disclosed any relation, nothing. So it could be even your friend or whatever. But if you have spent 2 lakhs for foreign travel, then you need to file your return. The third is electricity. So if you are paying EB charges of more than 1 lakh, if you are paying EB charges for more than 1 lakh, then you need to file a return, even if you are not required to file a return of income. The government may come out with any other conditions. So such conditions are fulfilled, then this provision is applicable. So that's what this mandatory provisions are. So we discussed about for whom it is compulsory. So we said it is compulsory for So we said it is compulsory for company, firm, for everyone else, that is individual, HUF, AOP, POI, AJP, that is artificial judicial person, for all of them, if your income is greater than basic exemption limit, your total income is greater than basic exemption limit. Basic exemption limit could be 2.5, 3, or 5. When you say total income, it is total income minus capital gain exemption minus 6A deductions. That is, you'll have to remove these capital gain exemption and chapter 6A deduction. That only is matters. And when you say total income, it includes other person income for whom you are assessable. So you could be a legal hire or clubbing of income. So that is what the compulsory is. This. The second category we said relating to beneficial. So, or let's say, or we'll even call it as foreign assets. So you hold as a registered owner or beneficial owner. What do you hold? Hold assets. When I say assets, it includes financial interest. Okay. So you could be a registered owner or you could be a beneficiary also. So you're either a registered owner or a beneficial owner or a beneficiary. And second thing is signing authority. Signing authority of any account outside India. So this is called, whenever you have foreign assets or some link to foreign, you need to file a return, even if you are not supposed to furnish return under section 139(1). And you are not a beneficial owner or beneficiary, you need not file a return if such beneficial owner or that is the registered owner has already considered the income from such asset and filed the return of income. So that is not applicable. The third thing we discussed was seventh proviso, that is based on your expenditure. We said current account deposit greater than 1 crore. We said foreign travel greater than 2 lakhs. EB consumption greater than 1 lakh, or other conditions which may be prescribed. So these are the things that we discussed in 7th proviso. So this is all relating to your return filing. Whatever we discussed in 139(1) is this. Okay, so these are the provisions that is discussed in 139(1). So now we'll move on to understand the due dates. One another thing which I forgot to tell you is, if central government may exempt. So we discussed people about 139(1), right? We said company, firm, AOP, individuals, or whatever. Depending upon the scenario, they need to file the return. Now, central government may come up and say, okay, these persons need not file the return at all. So that is what, like something like your specified senior citizen, which we discussed in 194P. So that is something like they can notify, they can introduce a person specifically to say that you need not file return of income on so and so conditions. So there are conditions in 194P. If you have satisfied, you need not file a return, right? So this is something like what government is saying, that we may provide you a list of persons or a group of category of persons who need not file the return. So that's what 139(1)C says. Okay, moving on, we need to understand the due date, right? We have been saying that returns has to be filed within the due date under section 139. So what exactly is due date? For company and person whose accounts needs to be audited under any other law or under this act. So that is, it could be 44AB or any other act. It could be it could be a Companies Act 2013, or it could be trust related acts, or it could be related to partnership related act. It is limited liability partnership requires audit when you cross the threshold of turnover. So mandatory audit under Income Tax Act or any other law. If that is the case, then that company, that organization, in case if it's a firm, even the partner. So if a firm is subject to tax audit, then the firm's partner also will have to follow the same due date that has been applied for that firm. So for these person, it is 31st October. So for whom all? For company, for a person who is required to be audited under the act or any other law, working partners of such person, that is working partners of such firm, which is required to be audited under income tax act or any other law. So for such person, it is 31st October. Next category is they have international transactions. They have international transaction. A company or any person has international transaction, which has to be reported in section 92E in form 3CB. Then the due date becomes 30th November. So if it's a partnership firm for which this section 92E is applicable, then the partners also fall under the same time. Not only the partners, even the spouse of the partners, if they're categorized under section 5A. So there is this Portuguese civil code. So that is in code. So I'm not going to talk that because that is not part of your material. So typically you can remember that it is not only partners. This 92E will only be dealt in final. So for time being, you just remember if there's a person who's covered under section 92E, the person in case of firm, the partners and the spouse in case they're covered under section 5A needs to file their return on or before 30th November. For any other assessee, it is 31st July. So that is the due date applicable for these persons. So we'll just see a exercise for this. So it's Ms. Shreya, 62 years old. 62 years old. She is a resident. So she is a resident. She earned the following income. She has earned interest from fixed deposits and interest from savings account. Whether Shreya required to file a return of income. So her income will be what? 2,48,000 plus 7,500. We said to determine the basic exemption limit, it must be computed before providing deductions. So she is eligible for 80 TTB, but we'll have to compute before that. So 2,45,000 plus 7,500 is 255,500, which is less than what? Which is less than 3 lakhs. Which is less than 3 lakhs. So she is not required to file a return of income. However, if she has incurred 3 lakhs as travel expenditure for her family to stay in US for 3 months, so then what happens is she needs to automatically file a return of income because irrespective of whether her income is exceeded or not, she needs to file a return compulsorily if she has spent foreign travel expenditure more than 2 lakhs. So that's what this provision is. So moving on, we discussed about 234A yesterday itself. It is typically whenever you are filing after the due date. So after 31st July or 31st October or 30th November, if you are filing a return, you will have to compute simple interest at 1% for every month. So the month starts, the date starts from the date following the due date of furnishing the return. So if your due date is 31st October, interest starts from 1st November. If your due date is 31st July, interest starts from 1st August till the date of furnishing return. If you are actually furnishing a return, let's say in December, from that August to December, August, September, October, November, December, for 5 months, you need to pay 1% interest per month. So the month includes half month. So even if I'm in mid of the month, even if I'm on 28th March, March should also be included. So it is part of the month. Even if it's any day of the month, that also should be included. Let's take, for example, I need to file due date. Due date is 31st July. I am filing on 2nd August. Now I need to pay interest for this because I have paid 1 month later. So 1 month later, so I need to calculate from 1st August to 2nd August. But even a part of month is considered as whole month. So it's technically like 31st August. So I'll have to calculate for 1 month. So it is month or part of the month, which what we are talking about in computing this 1%. In case if return is not at all furnished, an assessment is conducted. That is, the income tax officer scrutinizes your file. Then till that time, the assessment is completed. So the completion of assessment. Till that period, 234A will be levied. And 234A will not be levied to the extent self-assessment tax paid before the due date. So typically, if the taxes paid till 31st March 2022, that is 31st March of that year, 234A will not be calculated. So typically, if you don't have any tax payable, or if you only have refund or something, then 234A is not at all applicable because it is not on anything paid before 31st March. So self-assessment tax paid before 31st March, it's not included. So it's only on the tax payable after the year end, that is the 31st March of that year. So that is what it is said that. So self-assessment tax paid by the assessee on or before the due date of filing the return of income. So whenever the due date of filing of return of income, so not only till 31st March, even if you have filed it before filing of return income. So if you're, let's say your due date is 31st July, if you have paid all your taxes before 31st July itself, just that you're filing your return later, then also no 234A. So 234A is applicable only when you have tax payable beyond the due date specified under the Act. So that's what 234A is about. The other section relating to fee is 234F. So if you are filing belated return, you will have to pay 1,000 if your total income is less than or equal to 5 lakhs. If your income is more than 5 lakhs, you will have to pay 5,000. Just for the understanding purposes, if you are voluntarily filing return, and your income is what? Your income is less than 2.5 lakhs, 2.5 or 3 lakhs or 5 lakhs, then basically there is no 234F. So 234F is only for returns which is compulsory. So 234F is only for compulsory filing. So that is your company, your firms, your resident where your income is more than basic exemption limit, or it is for this foreign asset holders, or for the what you call this seventh provision. For all these things where it is mandated to file your income tax return, only there 234 applies. If you're voluntary filing, otherwise you need not file a return of income. Typically, when your basic exemption limit is less than the your total income is less than the basic exemption limit, then 234F will not be applied at all. So though your income is less than 5 lakhs, 234F will not be applicable in such scenarios. So that is interest and fee for you. So before going to the next section, I'll see if there are some questions which I can actually answer. Yeah, TCS is collected on invoice value, which is including GST. It is typically, depending upon the section, so 206C1H says collected on with including GST. So that's what 206 says. Whereas the scrap or this what you call alcoholic liquor and all those things, there it is not before, it is before GST. So for the motor car and the selling of goods, that is both these sections alone, it is with GST. Yeah, basically with respect to motor vehicle, the end distributor will only collect. The intermediary will not be collecting TCS. So if Hyundai is selling to a distributor, car distributor, TCS is not applicable. The distributor is selling to an end customer, then it is applicable. A private limited has to mandatory file return of income before the due date. So the due date is basically the right time, the specified time within which you are supposed to file the return of income. So that is what due date means. So due date is nothing but the date on or before which you must file your return of income if you are required to. So that's what provision is there. Foreign expenditure, whether related to business or personal, doesn't matter. Any foreign expenditure, it is up. So it is basically foreign travel. So any foreign travel expenditure, it is applicable. Yeah, even a part of the month, even 1 day, 2 days is also considered the whole month. Calculation of days is typically to understand the months only. So typically what happens is, I'll tell you, as I told you, if it is from 1st August to 2nd August, it is 1 month. If it is from 1st August to, let's say, 20th December, then it is 8, 9, 10, 11, 12. So you calculate the months in between. So you calculate the months in between to compute thing. So it is 1 month typically for in cases where it is within the month, and then you have seen in this case it is 1st August to 20th December. You are actually calculating 5 months. So that's how we calculate. So it is for the month. The day is specified to tell you. The day is specified to tell you for which are the months that you need to consider. Whether taxes can be paid in different time, yes, it can be paid across. You will always be paying advance taxes. You will also be responsible for, let's say, TDS would have been deducted from your income. So apart from that, if you feel that there is something more, you can pay at any point in time. You can pay any number of times that you want. Everything will be considered. Probably during the break, if you have any more questions on tax deduction, that is TDS, please post it so that I'll discuss it immediately after a break before we provide the next sections. So any questions on deductions, please post it during the break so that we can take it forward. So please explain the, can sugar wholesaler collect TCS? No, sugar is not listed in the product list. So since it is not the listed product, it is not there. But we said there is a provision called 206C1H, which is on any sale of goods, So in that case, sugar will also get covered. So sugar wholesaler of TCS will get classified under 206C clause 1H. Difference between 234A and 234B. A is for belated filing of return. So typically, let's assume you're supposed to pay 1 lakh of tax. Okay, you have till 31st March, you have paid 0. That is nil tax. In, let's say, June, 30th June 2022, you are paying 1 lakh. So this 1 lakh is applicable for 1% under section 234B from 040506. That is for 3 months. 3 months. So for 3 months, we need to apply 1% for 1 lakh. So that is what will be the interest under 234B. You are supposed to file return on 31st July. You are not filing return of income. Let's say you are filing it on 30th September 2022. You have not paid a tax till then also. So now, in this case, let's say you filed your return also on 30th June. Filed. So here, 234B is applicable. 234A is not applicable because I filed my return within the due date. Now I'm filing on 30th September. So for 234B, it is 1 lakh into 1% into how many months? 4, 5, 6, 7, 8, 9. That is, it starts from 1st April. So for 6 months, I compute this. For 234A, 1 lakh into 1% into, I need to file my return on 31st July 2022. So August, September into 2. So this is how calculate. So this is for April to September. This 2 months is for August and September because the due date is 31st July 2022. So that's the difference between 234A and B. Whether second-hand car, the TCS is applicable. Yes, second-hand car also, technically TCS is applicable if it is more than 10 lakhs. If 40-year aged person getting salary of 3 lakhs, which is less than 5 lakhs, he need not file the return because 234A is not applicable. See, filing the return is different. Filing the return, we said basic exemption limit. So for 40 years, the basic exemption limit is 2.5 lakhs. So if his income is 3.6 lakh, he needs to file his return of income. 234A is for late payment of interest on tax payable. So these are two different things. 234A is for delayed filing of return. 139(1) specifies who all must file the return. So in this case, if a person, that is in your case, let's say the 40-year person, since his income is greater than 2,50,000, he must file return under section 139(1). He must file under section 139(1). Okay, he must file his return. But 234A would be nil because there is no tax payable. No tax payable. So that is about it. And then see, yeah, this 206C1H is applicable on all transactions, whatever goods you are buying. So there is no restriction on goods purchase. There was only certain thing, but I don't think it is relevant for your exam. So as far as your exam is concerned, please keep it in a manner that 206(1)H is applicable on all purchase of goods. Whichever is called as goods or services, it is applicable. So if someone is receiving 8 lakhs in 1 year, they would have filed the return. The next year, if their income is less than 2.5 lakhs, they are not required to file. So this condition, whichever we are seeing, is every year. So this year, should I file my return? So it's not required that if 1 year I have filed, I need to file for the rest of the years. That is how it is due. So those are the questions. And lastly, few of you wants to summarize the due dates. So I'll just tell you, for companies and persons who are required to be audited under Income Tax Act or any other law, and the partners of such companies, such firms which has to be audited, it is 31st October. For anyone who is covered under section 92E and the partners relating to such firm, it is 30th November. For everyone else, it is 31st July. So to just summarize, company plus 44AB plus let's say any audit under other law. For this person, it is 31st October. For if it's a firm for whom audit is mandatory, then partners of such firm is also 31st October. So that is for 31st October. And then 92E, the organization, that is the person, partner of such firm, spouse of such partner under section 5A. For all this, it is 30th November. For others, that is individual, HUF, that is for whom audit is not mandatory, individual, HUF, other firms for what audit is not mandatory. For everyone, it is 31st July. So if audit is required, there is one due date. If audit is not required, there is one due date. For example, let's take company. For company, it is mandatory to audit irrespective of this 44AB. Company accounts has to be audited as far as Companies Act 2013. So in that case, for company, it is definitely 31st October. There is no alternate at all. But for a firm, for an individual, if they have 44AB, that is, they need to be audited under section 44AB, then it is 31st October. Otherwise, it is 31st July. So that is about the due dates. Okay. So that is all about your due dates. So we'll move on to the next section. Which is about, I'm sorry, I'll just few more things. If due date is extended, yes, the revised due date is what applicable for 234A and 234F. So whatever is there is the due date at that point in time. For example, currently the due date was 15th February for company, 15th March for companies. So that becomes the due date for 234A. Yeah, if transfer pricing is applicable, then the last date for that company also is 30th November, correct? So when you say TP, Any person, this person could be company, firm, LLP, or anyone for whom TP is applicable, then it is 30th November. Okay, so moving on. The next section that we'll be seeing is loss from return. When you say loss from return, it is covered under section 139, clause 3. 139 clause 3 says you will have to file a return of loss in case if you have made losses in the respective heads. So section 80 says to claim your losses, that is to carry forward losses, you must file your return within the due date specified under section 139(1). So what are those losses? Business losses under section 72(1), speculation losses under 73(2). You can leave out the section. So typically it is business loss, speculation loss, specified business loss, capital gain loss, and maintaining resources loss. So these losses, that is business, speculative business, specified business, capital gain, horse race losses. These five losses can be claimed only when you are filing a return of income within the due date specified under section 139(1). What is it? Whatever we saw right now. 31st July, 31st October, 30th November. Whichever is applicable to you, only when you file the return within the due date, you are allowed to claim your losses of business, speculation, specified, capital gain, and finally the horse races. These 5 losses can only be claimed when you are filing it on time. So what are the losses you can typically file even after the due date? Even if you are filing a late return, you can claim house property loss. So house property loss is allowed and unabsorbed depreciation. So these two can be claimed even if you are filing late return. Even if you are filing late return, it is still allowed. So that is what the provision says under section 139, subsection 3. The next two things that we'll see is belated return and revised return. What does the word belated mean? Belated means you have the word there itself, okay? So this is the meaning of belated. So belated is basically late. So now late returns. So whatever is the due date is specified, right? 31st July, 31st October, 30th November. Now there will be situations where you are not able to file it within the time before that date. So in that case, you can still file your return. You can still file your return before 3 months prior to the end of the relevant assessment year. So if you're actually considering previous year 21-22, it is 31st December 2022. If it is 22-23, it becomes what? 31st December 23. So that's the 3 month prior. So typically, 3 month prior is basically 3 months before that assessment year end. Okay, so that's what they're saying. If it is previous year 2021-22, then what the assessment year will be? Assessment year will be 22-23. So 23 ends in 31st March 23. 3 months before that will be 31st December 2022. So for previous year 21-22, you can file your return up to 31st December 2022. So that is what is there, relevant assessment year before assessment year end. So if this is the period, this period only, that is, let's say your actual due date is 31st July, you can file up to 31st December 2022. Your actual due date is 31st July 2022. You can file up to 31st December 2022. This is the period where what 234A and 234F is applicable. 234A and 234 is applicable only in these scenarios, that you are filing after the due date, but before the limitation. What is the limitation? You cannot file a return after the 31st December. So that's what the provision says. 3 months prior to the end of the year, or completion of assessment. In this is typically like in case if a particular income tax officer picks up the case and finishes the assessment before this period itself, then that period only is relevant. So typically it is the due date before completion of assessment or 3 months prior to the end of the relevant assessment year, that is 31st December, whichever is earlier. So within that date, you can file your late return. So that's what it is. So typically the word assessment is income tax officer reviewing or scrutinizing your return. That's what you call it as assessment. So if that is getting completed before this date, that is before 31st December 2022, then that becomes date. Let's say in this case, the assessment was completed on 31st October 2022. Since it is before 31st December, this becomes the due date. So this becomes the due date because it is before 31st December. So you'll have to file your return before 31st October 2022 if the assessment is getting completed on that date. So that is what the provision says. So what is revised return? Revised return is the same provision as belated return. That is, you'll have to do it within before 3 months or completion of assessment, whichever is earlier. But you can revise a return filed under section 139(1) or section 139(4). So you can revise the original return, you can revise a belated return. Both can be revised. Why do you revise? After filing a return, you notice that you have missed out something, you have provided something wrongly, then you can go and rectify. So discovery of omission or wrong statement. So you can correct your return, make changes to your return for any omission or any mistake committed in the return. So you are free to go and revise it. You can revise how many ever times you want. So there is no limitation. You can revise how many ever times you want, but revision should happen before 3 months. Same as what we discussed for 139(4). Same applies to 139(5) also. So that's the thing. So with this, we will take a short break and then come back. So welcome back. So as I told you, we'll address some of the questions and then proceed. One of the questions, Pandava on this 80 CCD. I'll just tell you, there is 80 CCD. You have three categories, right? 1, 1B, and 2. This 1 and B is by employee or the person who's depositing. 2 is for employer. So we cannot use the balance to 2 because 2 is a different contribution we are talking about. We are not talking about the same contribution. So we said for 80 CCE, we said the limit is 80C plus 80 triple C plus 80 CCD of 1 alone, right? So for this you have 1,50,000. And then you have 80 CCD 1B. You can use additional 50,000 for the same purpose. So it is for the same contribution. But when you're talking about 2, it is 14% of salary in case of central government, 10% of in other cases, 20 for other cases, right? So in this situation, whatever we are saying here is plus, is additional. But you cannot club 1 and 1B with 2 because 2 is for a different purpose altogether. It is not contribution by employee. It is not contribution by a person. It is contribution by an employer. It is 14% of salary in case of central government, 10% of salary in case of other cases. So this is the provision that is provided. So you cannot club 1, 1B and 2. 2 is independent. 1 and 1B is different. You cannot take that extra and use it for 2. You cannot do that. So if I guess I've answered your question. And rest of the thing probably like again compute interest for 234A. So as I told you, 234B and thing. Let's say you're supposed to file your return. You're supposed to file a return on 31st July. Okay. You have a tax payable of 1 lakh. Now you are actually filing the return on 30th September 2022. You are paying, you are filing. Okay. So when you are paying, you will have to pay 1 lakh plus 1% under section 234B because it is for the period. What period? 1% for how many months? It is August, April, May, June, July, August. Because 234B says if you have not deposited 90% of your taxes from 1st April, that is after the end of the previous year, 234B starts to get accumulated. So from 1st April, for every month or part of the month, you pay 1%. So now you are paying on 30th September. Even if you are paid on 10th September, even if this is 10th September, you will have to consider September also. So it doesn't matter which date of September you are paying, you will have to consider. So how many months? 1, 2, 3, 4, 5, 6. So you will be paying 1% for 6 months. So 1 lakh into 1% for 6 months will be 6,000. So 234B interest is 6,000. In case of filing, 234A will be applicable. So for this, it is 1% for how many months? It is only August and September. That is, the due date is 31st July. So it is only for 2 months, August and September. So for 2 months. So you'll only be computing for 2 months. So that's again on whether after 31st December can the return be filed? No, Namrata, return cannot be filed after 31st December. That is the maximum time in which you can file is only 31st December. If you need to file a return after that, there must be a notice from the income tax officer requesting you to file. Otherwise, you cannot file on your own. You cannot file on your own without the notice. So for your exam purposes, For intermediate purposes, remember after 31st December, you cannot file your return. What is completion of assessment? Dubey, the completion of assessment typically refers to sometimes what happens is you file your return or there is some information about you. The income tax officer will pick that information and question you about the authenticity of the income and numbers you have reported. So this process of analyzing your return and scrutinizing your return by an income tax officer is called assessment. Your income is assessed. That's what you're calling. So coming back to the 80CCD, the question is whether what is the total deduction available under section 80CCD, then can we take. See, if you wanted to know what is total 80CCD, I have explained here. 80CCD is 1.5 lakhs under 1, 50,000 under 1B, 14% of salary for 2 and 10%. So all this put together is what? 80CCD. So you'll have to add all these things. So for 80CCD, 1, it is 1.5 lakhs. 80CCD 1B, it is 50,000, which means that is 2 lakhs. And 80CCD 2, it is 14% and 10% of things. So this is all 80CCD. You can do the math. Taking all this will give you the total consideration for 80CCD. If it is only 80CCD, only this. So this is there. So this is about 80CCD. So we'll move on to the rest of the thing for this session. So there are two sections, that 6 and 6A, the subsection 6 and 6A talks about what additional information you need to furnish. First is about basic information. So you need to provide what are all the income that is exempt. You'll have to provide the list of assets for which you are the owner or you are the beneficial owner or the beneficiary, the bank account and credit cards held by him. Of course, credit card are not required these days, but bank account needs to be specified. Then if there is any expenditure exceeding the prescribed limits incurred by him under prescribed rates. So if some head says that you can only include this much, for example, if 80C says it is only up to 1.5 lakhs, you'll have to actually quote how much you have deposited. That is, let's say you have made premium of 2.5 lakhs, deduction is restricted to 1.5 lakhs. So both this amount should be provided. So expenditure exceeding the prescribed limits under the prescribed rates, this is relating should also be disclosed. Anything else that is being provided in the Act should also be provided for under 6. 6A is specific to business. So whenever you are filing a return, there will be, in case of 44AB is there, we need to provide such information. So and then, so this is typically what information you need to furnish. Furnish information. So report of audit referred to in section 44AB needs to be submitted, and anything related to the business, that is address, the place in which you are carrying out the business, should also be specified. Name and address of the partners of such business or profession should be provided. And if it's a member of AOP or member, name and address should be provided, that is name and address, and then also the share of the assessee should also be provided. So these are the additional business information which must be provided under the clause 6A. So the last type of return is called rectification return. It is covered under section 139, subsection 9. So now 139.9 says, the assessing officer, after we file the return, let's say Arun files return on due date. He files it on 31st July 22. He has filed it in this manner, saying that let's say what, interest income 8 lakhs less 80C 2,50,000, total income 5,50,000, and he has filed his return. Is this correct? This is not 2.5 lakhs, right? This is not 2.5 lakhs. It is only 1.5 lakhs. So after we file the return, income tax officer, what he will do is, he will intimate Arun that whatever you have filed is wrong. So he will intimate Arun under section 139.9 saying that ATC can be limited to 1.5 lakhs. So this is an error in return. He will request Arun to rectify. He will say, Arun, please rectify your return. Please rectify your return. Now, this will be done by the AO. Moment AO provides his intimation, he will provide an opportunity. That is, he will request Arun to rectify the return within 15 days. Within 15 days from the intimation date. So now if so within 15 days. So now if the due, he has filed it on let's say he has filed it on 31st July 2022. He has filed it on 31st July 22. Now the notice is being issued on, let's say, 10th August 22. So he is getting, so 15 days from this plus 15 days, within that he needs to rectify. What will he do? He will file another return saying that this time he will say my interest is 8 lakhs. My ATC is 1,50,000. So balance of 6,50,000 is what I pay tax. So I pay tax, I do all that, and then file my return. So this is what is 139.9 is about. So if not rectify within the timeline, whatever return you have filed shall be invalid, which means it is like you have not filed a return at all. It is like you have not filed a return at all. So your return will be treated as invalid if you have not done it within the time. However, let's say you're doing it after the provided due date, but if you're doing it before the end of assessment, AO may condone the delay. Condone is basically saying that, okay, fine, it is okay, I know you have filed a delay. I agree that you had your own situation for filing a delayed rectification. It is completely okay. So if AO says condoning the delay means AO is okay with the delay and he accepts the whatever rectification has been done. So in that case, it will be treated as valid return. So that is what is there. So typically it has to be rectified within 15 days, but post 15 days, but before assessment, you can still rectify. If the assessing officer feels that it's okay, it can be done. So that's what is the provision of section 139.9. So with that, I guess we have covered the basic provisions of all relating to 139.9. So that's about 139.9. So if there is anything related to return of income, I'll just answer. Okay, one last time I'll again repeat this ATCCD. If you have not been provided with the number, if a question does not provide the salary of the person, you cannot calculate ATCCD2. And if the question says only employee has contributed, there is no ATCCD2. So ATCCD is only for employee, it is only 1 and 1B. Only if it is employer, it is ATCCD2. So go through that question and see whether the question says employer has contributed. If employer has contributed, you need to know the salary to compute ATCCD2. Otherwise, you cannot compute. So that is how the question will probably would have said only the employee has contributed. In that case, it is 2 lakhs, 1.5 lakhs for one and 50,000 for 1B. It can never be for two. To calculate under subsection 2, you must mandatorily know the salary of that person. Otherwise, you cannot compute at all. On your request, the MCQ file, I'll please go through it and take it in the next session. I don't have the MCQ right now in my hand. That's what, Vrinda, the incorrect return will be treated as invalid if you have not rectified within the due date. That is 15 days, within the time provided. You are provided with an opportunity to rectify within 15 days. If you have not rectified, then it shall be treated as invalid. So that is what it is basically. So whatever it is there, it has to be done within that 15 days. If not, it shall be treated as invalid. As I told you, assessing officer has the power to condone the delay, which means if you have even filing a delayed rectification, even if you are filing a delayed rectification, in case if you have actually, if the assessing officer can provide that opportunity and say, okay, I agree that you have filed it delayed, it's okay, but this agreement is also before the assessment. So that's what it's there. So incorrect return will be treated as invalid if you have not rectified at all. If you have not rectified at all, then it will be treated as invalid. So moving on, we'll go to this next section of PAN and Aadhaar and other things. So as far as this PAN goes, what is PAN? What is your idea of PAN? We all know it is permanent account number, correct? So typically, there's one more question, I'm sorry. So the 15-day time limit which you are talking about is basically the time limit provided in the intimation. If you are doing it after rectification, there is no separate procedure and all. You complete the intimation, it may be accepted or not accepted. If it is accepted, it means they have actually condoned the delay. That is, they have accepted your return. If not, they'll probably reject your return. Then in that case, it will be treated. So there is no separate application currently to request a delay in filing that intimation. So the current procedure is even after 15 days, you rectify it online. The assessing officer may tell you that I agree, I accept the reason. For 234F, can I file after 31st December? No, not now. Earlier, you had time till 31st March to revise your return. Currently, it is only 31st December. So you cannot file returns after 31st December. So that's what it is. So as far as this amendment in this chapter is concerned, it is 234F. It is restricted to 31st December. Earlier, it was also there till 31st March. So it is restricted that period. So other than that, I don't think there are any major amendments. For after 15 days, so let me tell you, currently it is only online. So practically, you need not, there is no procedure of separately writing a letter and all currently. It is filing it online. The assessing officer may request the reasons for delay. You provide the reason, it is accepted. So as far as the exam is concerned, please understand, it is within 15 days you need to rectify the return. If not within 15 days, you are allowed to do, but the assessing officer should accept it. Let's keep it there. There is no other procedure that is actually required. That there is no procedure actually at that point in time. So as far as the examination is concerned, please keep it with that 15 days concept alone. Okay, coming back to this permanent account number. So what is permanent account number? It is basically a unique identification. It is basically a unique identification provided to the taxpayer. So that is permanent account number. Just for the knowledge purposes, there is a format which is basically 10 characters. Totally, it is 10 characters. PAN has 10 characters. The fourth character denotes a type of person. For example, if you know a PAN, just think through that PAN. The fourth character of that PAN, if it is P, it is individual. If it is F, it is firm. If it is C, it is company. If it is T, it is trust. And the fifth denotes the first letter of that particular person. If my name is Muthu Padaniyappan, my fifth letter will be M. So that is how it goes. So your fifth letter will be a last name. If I have a last name, the last name will be my fifth letter. So that is how this basically goes. So this is how you actually decipher the PAN on what it is there. And Aadhaar can be interchangeably used with the PAN to be linked on or before 31st March 2022. So the extended due date for us there is tomorrow. Before tomorrow, we all have to link our Aadhaar with the PAN. If not, what is the consequences? We'll see in the subsequent slides. So who must have a PAN? So not everyone can have a PAN. So we must know who all can have a PAN. So who all can have a PAN is basically when the total income exceeds the maximum amount not chargeable to tax. Or such person has to get it before 31st May of the assessment year for which such income is assessable. So if I'm having income I have never had an income. For the first time, I'm earning income in, let's say, August 2021. I'll have to obtain a PAN before 31st May of the assessment year for which such income is assessable. So typically, let's say I have an income, interest income on 31st August 21. Let's say I have interest income of 4 lakhs. This is the first ever time I'm getting this interest income. I don't have a PAN. Now, once I don't have a PAN, what I need to do is before 31st May 2022, that is assessment year 22-23, 31st May of this period, I must obtain PAN. I must obtain PAN. That is, I must apply and obtain PAN. So that is the due date as far as your PAN goes. So 31st May for the assessment year for which such income is assessable is the due date for that situation. And in case if your PGBP exceeds 5 lakhs in any previous year, you are running a business, you have a business income, that is your sales, turnover, gross receipts exceed 5 lakhs. If it's exceed 5 lakhs, before the end of the previous year, you need to obtain PAN. So that's another situation where you need to obtain your PAN. The last two categories is for the persons related to a particular company. So for example, as a resident, other than an individual which enters into a financial transaction of an amount aggregating 2.5 lakhs. So any person other than an individual, any resident, if they're having a financial transaction of more than 2.5 lakhs, then they must obtain it before 31st May of the immediately following financial year. So that is 31st May here. So what do you mean by this? If a person, let's say it's a person who's not an individual, who's a resident, is actually doing some deposits of more than 2.5 lakhs, then they need to obtain PAN. So that is the first time they're having a transaction who's not an individual. It could be a trust, AOP, or someone who's having a financial transaction. If they have a financial transaction for more than 2.5 lakhs in one particular financial year, it is 31st May of immediately following financial year. Person who is a managing director, partner, trustee, author, founder, karta, chief executive officer, principal officer, or office bearer of the person referred to in clause 5. So whoever is having financial transaction of more than 2.5 lakhs must obtain a PAN. It could be any organization, they must obtain a PAN. That organization, that is, if it's HUF, the karta should also obtain PAN. If it is a firm, partner should also obtain PAN. If it is an AOP or something, the member should also obtain the PAN. So if it's a trustee, the trustee or the author should also obtain PAN. So typically, once this is satisfied, member, the key managerial person, the key persons of this organization, it could be your director, partner, karta, trustee, author, it could be anyone. Such person also should also obtain PAN. So these are the recent introductions in the last couple of years to say that PAN is mandatory for these person also. So if it's a trustee and author also should have the PAN. If it is a company, managing director or directors or the principal officer or even the chief executive officer should also have the PAN. So that is the scope that they have provided thing. And wherever when you talk about PAN, they say if you have Aadhaar number, it is equivalent to a PAN. So you can quote Aadhaar number wherever PAN is required. So that is equivalently perfect. So in that case, Aadhaar number can be replaced with PAN. So that is the provision for application of PAN. Now we need to understand where all we need to quote the PAN. There are various transactions where you need to quote the PAN for the in a particular transaction. So what are that? Basically, whenever you are purchasing or selling a motor vehicle, for all transactions you need to quote. Anything relating to opening an account, that is savings bank account or any fixed deposits or anything, for that also you need to apply. Making an application with respect to issue of credit or debit card, for that also you need to apply for all such transactions. Opening of a demat account, which needs to be provided. So motor vehicle, you're opening an account for everything, we need to provide this PAN for all transactions. And payment to a hotel or restaurant where it is in cash exceeding 50,000. So if it is in cash, it is exceeding 50,000, we need to quote the PAN. Whenever it is in connection with the travel of any foreign country, purchase of foreign currency, If you are purchasing it more than 50,000, we need to obtain PAN. Mutual fund or purchase of its units, 50,000. A company or institution acquiring debenture or bonds. So we are buying debenture or bond for which we are paying to a company or any organization for amount exceeding 50,000. Payment to Reserve Bank of India for acquiring bonds, for that also 50,000. For all these in this slide, it is 50,000. The hotel, the foreign currency, the RBI bond, the debentures or bonds from a company, for all these things, it is 50,000. Then you have deposits with the banking company or post office. So it is any cash deposit. If you are making exceeding 50,000, it is applicable for a bank. If it is post of it, if it is post of it during this period, so it could be for both this. We are saying that it could be 50,000 in case during any one day, or more than 2.5 lakhs during the demonetization period. So these are the, for a bank or post office, if you're depositing more than 50,000 in cash in one day, or more than 2.5 lakhs between the demonetization period of 9th November 2016 to 30th December. Of course, this will not be applicable to you right now because your question is not going to talk about that particular period. So it is, as far as the question goes, it is 50,000 during any one day. Purchase of bank drafts or pay orders or bank. So if you're purchasing any demand drafts or something, if you're paying 50,000 in cash, then it is applicable. Any time deposits with a banking company, that is a fixed deposit or recurring deposits with a Nidhi or NBFC, it is amount exceeding 50,000 or aggregating to more than 5 lakhs in a year. So there are two limits: per deposit 50,000 or in a financial year more than 50 lakhs. So these are the deposits. And apart from that, any prepaid instrument, any prepaid payment instrument relating to RBI. So whatever that related to that, if you're paying in cash for that. So for any prepaid payment instructions that you are paying it in cash, then if it is more than 50,000 in one financial year, we need to quote the PAN. Life insurance premium, more than 50,000 in financial year, we need to quote the PAN. Sale or purchase of securities, again, more than 1 lakh per transaction, more than 1 lakh per transaction. Purchase of shares of a company not listed in recognized stock exchange, for also that 1 lakh. So shares, securities listed in stock exchange or securities not listed in stock exchange, it becomes 1 lakh. Sale or purchase of any immovable property, it is amount exceeding 10 lakhs. If you are doing, you need to quote things. So when you say for 10 lakhs or the stamp valuation exceeding 10 lakhs, so it could be the actual value or the stamp duty value. If either of that crosses 10 lakhs, you need to quote your PAN. Any other goods or services, 2 lakhs. So maximum limit, wherever you are doing transaction more than 2 lakhs, then it is there. So whatever we saw now, it is all banks, shares, deposits, life insurance premium, all this, right? So even if there is anything else other than this, the maximum limit is 2 lakhs. In case of minor, in case minor itself have a PAN, they can quote minor's PAN. If not, they can quote the parent or guardian's PAN. So that is what it is there. So if minor is actually having his own income, the skilled income that we spoke in clubbing, then in that case, it becomes automatically, you can report that PAN itself. If not, the parent or guardian's PAN. So if in case PAN is not available and I'm actually not required to obtain a PAN, yes, I'm depositing more than 50,000 in cash, but I'm actually not required to obtain a PAN because I'm an individual where my income is less than 2.5 lakhs, so I don't need to obtain a PAN. What do? I'll have to give a declaration in Form 60. Declaration in Form 60, whereby it states that that I don't have a PAN because my income is less than the taxable limit, that is the 2.5 lakhs or whatever limit that we're talking about. So that person has to state that my income is less than that limit, so I need not obtain a PAN. So typically you are stating a reason why you need not obtain a PAN and issue Form 60. So with that, it is okay. Even if it's a transaction where you need to quote a PAN, you can give this declaration and get it done. So that's what it is about. Okay, so payment of life insurance premium of 45,000. What is the total thing? That is 45,000 LIC. What did we say for LIC? For LIC, we said that it is more than 50,000. So it is not required because it is what? less than 50,000. So you need not quote the PAN. Payment of 1 lakh for 5-star hotel, out of which 60,000 was paid in cash. We said if 50,000 is more paid more than by cash, then you need to quote. So yes, we need to quote because it is greater than 50,000 in cash. 80,000 by ECS through bank account for acquiring debentures. For debentures, we said PAN should be applied. Yes. So payment of 90,000 for cook travel. For foreign travel, if it's only cash, we need to report. If it is through bank, it is not required. Is issue of credit card? Yes. So issue of credit card, you need to provide your PAN. For travel, only when it's cash. Only when it is cash. So whenever it is in cash, that is for foreign travel, payment in connection of foreign currency, and any time payment in cash exceeding 50,000, only then it needs to be reported. So that is where we said it's not required for this particular provision. So these are the answers for that. So typically this is how, probably when you say talk about exam, this is how you'll be questioned about a particular transaction to tell you whether PAN must be obtained or not. So broadly you can understand. You need not go into specific. As I told you, any bank, as far as bank is concerned, savings bank account opening, your deposits, fixed deposits, recurring deposits, and your cash deposits more than 50,000. So remember, as a segment, bank, these are all the transactions. Bond, debenture, these are all the transactions. Securities, these are all the transactions. So just broadly remember so that you know what actually it is. So moving on, we'll understand about Aadhaar. So what exactly Aadhaar? We said quoting of Aadhaar is mandatory based on the circular. So before that, if any questions on PAN, I'll just answer. Jamil, as I told you, currently the 234F is amended. It is only up to 31st December. So when I answered what are the amendments in this chapter, 234F, earlier it was still 31st March. Currently, that is not the provision. The provision is there, whatever I have provided in the slide. So whatever the provided in the slide is still 31st December only. Currently, you can revise your return. So there is no provision till 31st March. It's restricted to whatever was stated till 31st December. Filing return of paying return, which is payable in the income tax. Yeah, of course. So you will be filing return of income for the income that you have earned, and you'll have to pay taxes on that. So that's how you file your return. Yeah, when I say resident, I refer to resident in that previous year only. If you don't have any category of this, but you still need to have a PAN, you can obviously have. So PAN does not say that you need to obtain PAN only on these situations. That is not the case. Whatever we saw is mandatory requirement. Mandatory requirement when your income crosses the basic exemption limit, when your business turnover or gross receipt is more than 5 lakhs, is crossing, only then PAN is required. So when you say 5 lakhs, it is aggregate. In that year, it has to be more than 5 lakhs for you to obtain a PAN. So you can obtain voluntary also. So it doesn't matter whether you have income or not, you can still have a PAN. Yeah, Jamil, as I told you, PAN is mandatory in most of the transactions. Wherever we go, they will request us to provide. But in case, if you are not required to obtain a PAN according to the rules of Income Tax Act, you can still give a declaration in form number 60 to say that I need not obtain a PAN. So even if you're actually transacting more than 50,000 in cash in a particular hotel or foreign currency, the rule says you need to quote your PAN, but you can still say I need not require to obtain a PAN according to the laws of the Income Tax Act. So this declaration will be given in form number 60. So that's the thing. Okay. So Aadhaar, we'll come back to this Aadhaar. So what does Aadhaar says? It is quoting of Aadhaar is mandatory. Quoting of Aadhaar is mandatory. So if you have been probably involved in filing of income tax returns, you would have noticed that the PAN quoting has become the Aadhaar quoting has become mandatory for the last 3 years or so. So it has become mandatory now. And if there is any failure to intimate, Aadhaar, whatever before the due date that they have specified. Currently, the due date is 31st March 2022. It all started with 30th June, I guess, of 2020 or something. So it got extended and it has now come to 31st March 2022. So if you are still not linking it even till tomorrow, then from the next date, that is of 1st April 2022, that is from 1st April 2022, the PAN shall be inoperative. The PAN shall be which means it's like you don't have a PAN. It's like you don't have a PAN. But in case if you are later point in time, let's say after 1 month or 2 months, you are still quoting your PAN, what happens is the PAN automatically again becomes operative. So it will be inoperative. It will be inoperative till the time you are not quoting it, till the time you are not intimating it. So till the time you are not linking. Only for that period it is inoperative. So there has been some fake news also spreading that your PAN itself will not be valid at all for the rest of your life. It's not like that. The PAN will not be operative till that period. So till that period, you cannot make any transactions where PAN is mandatorily required. So that's the point. However, on intimation, it will become operative. So however, this linking or this intimating or this even obtaining a PAN, obtaining an Aadhaar is not applicable in this Assam, Jammu and Kashmir and Meghalaya. It is also not applicable for non-resident. It is not applicable if they are already 80 years or more. Of course, if you have already obtained Aadhaar, it doesn't matter whether you are crossing 80 years or not. But this provision is typically, if you have crossed 80 years, it is okay. You need not obtain Aadhaar. And you are not a citizen of India. So for these reasons, you need not obtain an Aadhaar. That is residing in Assam, Jammu and Kashmir and Meghalaya. That is a person who is more than 80 years of old, a non-resident as per the Act, not a citizen of India. So these are the 4 things which are situations where you need not obtain Aadhaar. You need not obtain Aadhaar. So what if the late fee? Like we saw 234F for return. Here you have 234H for this Aadhaar. So Aadhaar says under section 234H, whenever you are intimating it at later point in time, you need to pay a fee of 1,000. So if you are not quoting it till 31st March, if you are quoting it later after 31st March, you need to you need to pay a fee of 1,000 and only then you will be able to link it. Okay, the next section that we are going to talk about is section 140, which provides you who are the persons who can authorize the return. We said for about filing return of income, someone has to sign, right? Someone has to authorize. So that authorization, who needs to do? So we are going to see which assessee, what circumstances, who will be the authorized person. So typically, an individual, if it's an individual, if the individual is absent from India, which means if the individual is not available in India at all, if it's not available in India, then in case if it's possible, the individual itself, or he can authorize a person with power of attorney. So POA stands for power of attorney. Okay. So an individual or a person authorized with the power of attorney can do it. In case the individual is mentally incapacitated, so mentally is not a stable person or able person, then it could be a guardian or any other competent person. That is, it could be a person who's legally allowed to authorize on behalf of him. So any other competent person. In case if there is any other reason, let's say he was sick, he was medically sick for that period of time, a small period of time, because of that it's not possible to verify, he can do the person with the power of attorney. In all other cases, he himself only can authorize. So this is the basic thing. So basically, when an individual, the individual himself should authorize the return. Individual himself should authorize the return. But in case if he is not available in India, he is absent from India, he can do it through a person authorized under power of attorney. In case if he is mentally incapacitated, then also it can be by guardian or any other person, competent person. For any other reason, if he is not able to verify, through a person who is authorized with power of attorney can also authorize. The next thing is HUF. It is similar to individual. Only thing is, instead of a person authorized with power of attorney, we use the word member. So if it's whether Karta is absent from India or mentally incapacitated, see the same conditions. These are the same thing that is a thing. Where the Karta is absent from India, where the Karta is mentally incapacitated. Then we are saying any other adult member of HUF can actually take it, can actually authorize the return. Any other case, Karta himself. So typically when you say HUF, Karta is the one who should authorize the return. But if Karta is actually absent from India or is mentally incapacitated, any adult member of HUF can authorize it. What about company? Almost same. Instead of Karta, you replace with the word managing director. So if managing director is not available to verify the return, or there is no managing director at all in that company for that point in time, then any other director or any person prescribed for this. So there could be authorities prescribed for this. They could be like your chief executive officer, chief financial officer. So basically the principal officers, the key managerial persons of a company are all prescribed persons. If it's a company which is non-resident, not a resident in India, which is basically non-resident, then a person authorized with power of attorney. So a non-resident company can authorize someone with power of attorney. So, but practically speaking, with all this digital signatures and other things, with all this digital signature has come into picture, digital signature can be signed from wherever they are, right? So there is no requirement of being in India or whatever thing you're talking about. So the concept of absent in India, the concept of not being able to verify is technically not or practically not applicable at this point in time because of the concept of digital signature. So even if it's not a resident in India, the managing director will have a digital signature, they will use that. Earlier, you need to sign it. So you cannot send it to, let's say it's a company in America, you cannot send the return to America, ask them to sign, get it back, then file it with the income tax department. There is time involved. So there could be a situation that you actually do it through a person authorized with POI. But currently, as I told you, since it is digital signature, it's actually being filed with it. But for purpose of exam and theoretical understanding, if it's not a resident in India, a person authorized with power of attorney shall sign. And if a company is in the process of wounding up or a receiver is appointed, when I say receiver of asset. So typically, a court will appoint a person and say, you take care of this liquidation process. So in that case, the liquidator will be the signing authority. So where it is the process of wounding up or a receiver has been appointed by the court. If a management has been taken over by the central government or state government, the principal officer of that company. So it could be the general manager or some designation who will be authorized to sign on behalf of the company. The company is an insolvency process. The insolvency professional according to the Insolvency Act. So that insolvency is also like wounding up only. It's like liquidating only, but it is through a separate act of this insolvency. So insolvency professional will be handling the signature of authorization. In any other case, it shall be the managing director. So as I told you, typically a company's return should be authorized by managing director. But if managing director is not able to verify or there is no managing director, you appoint a person, an authorized person, any principal officer of person can sign it. Any other director or any principal officer. Then we said in case of not a resident, you can appoint a person of power of attorney. So that's what it is. Similarly, for firm, I don't think I need to explain at all. Whenever just replace the word director, when a managing partner is not available or there is no managing partner, it shall be any other partner not being a minor. So similar to company, we said when managing director is not available or able to verify or there is no managing director, any director or a prescribed person can verify, right? But here it is managing partner, any partner can verify. Only condition is that partner should not be a minor. In any other case, the managing partner. For LLP, just that the word is designated partner, otherwise it's the same provision as your firm. So it shall be the designated partner, any partner or designated partner. For rest of the thing, for local authorities, principal officer, for political party, it is chief executive officer. So basically a political party will have a secretary who will be heading the party. So that member will be the person who is eligible to sign the returns. And for any other person, that person himself or any other competent person. So it could be any other person which is not described here. So it's like a disclaimer clause to say that if there is any other person, that person himself or any competent person can call. In case of AOP or BOA, any member or principal officer can sign the return of income. So these are all the category, these are all the designation who can authorize a return of income of a particular person. So this is discussed in section 140. So with that, probably I guess we have covered most of the provisions of the entire provision. The one thing that we'll be covering, the last section that we'll be covering today is self-assessment tax. Whenever we said self-assessment tax, for your, in fact, for your intermediate purpose, there is no foreign tax credit, there is no MAT credit also because it is not covered in your syllabus. So for intermediate purpose, what we can do is, we'll just see how it works out, self-assessment tax. What exactly is called as self-assessment tax? So the word self-assessment, okay. So what do you mean by the word assessment? Just split it as assess alone. What is mean by assess? You calculate, you evaluate. So you calculate tax on your own. You calculate tax on your own. So that is when you calculate this tax. So that is self-assessment tax. Now in this self-assessment tax, so you are doing it on your own, right? So that is what you are calling the self-assessment tax. How do you calculate your tax? You compute your total income. You compute your total income, correct? Some, let's say 9 lakhs. You compute your tax. So what will be the tax? Up to 5 lakhs, it will be 10,000, 12,500, right? 12,500 plus 5 lakhs to 9 lakhs, it is 4 lakhs into 20%. So that is 80,000. So it will be 92,500. Then you add cess, correct? So whatever cess, so what will be the cess for 92,500? It is 4%, correct? So it will be 3,700 if I'm right. 925, 3637, yeah, 3,700. 96,200 becomes your tax payable. So now you need to reduce TDS, TCS less advance tax. So let's say TDS is around 10,000. Advance tax you have paid around 65,000. So basically you have paid 75,000. The balance 21,200. This 21,200 is what is your tax payable. In case if 234B, C and all is applicable, you need to calculate. So whatever interest, add interest under section 234A, B, C. All that has to be added. But for just for understanding purpose, we are not going to compute that. So after that, whatever is applicable, that is your tax payable. This payment is called self-assessment. This is called self-assessment tax. So this self-assessment tax is what we are discussing now. So tax already paid, that is your advance tax, or whatever tax, whatever has been paid, and then TDS, TCS. So after this adjustment, so for your intermediate level, it stops here. So tax already paid minus your TDS, TCS will be your. So whatever tax minus advance tax minus TDS, TCS will be your tax payable, right? So that tax payable will become, so whatever is your tax payable plus these interest plus the fee, all this put together will be called your tax liability, right? So we calculated your tax payable included, and this is what we are calling it as tax liability. So tax payable plus interest under section 234 ABC plus fee under section 234F. All this put together is what you're calling it as what? Tax liability. So this tax liability is what is called self-assessment tax. Okay, now this problem we'll just rework here a little. We'll take same, that is tax is how much? 96,200 less what? TDS 10,000 less advance tax. How much did we take? 65,000. So you have 21,200. Now I add interest 234B. Let's just for time's sake, we'll just take it as 1,000. Okay. So it is 22,200. Let's say I'm filing late fee. I'm filing late fee. So 234F. Let's say it is 5,000. So 27,200. Okay. So now this 27,200 is what is my tax liability. In this 27,200, let's say I'm paying 25,000. Income tax says the order in which this 25,000 should be allocated is first to 234F. That is 5,000. Next to other interest, 1,000. So remaining only is for tax. That is 19,000. So this is how you set off this tax. So it says first allocated to fee, whatever you're paying, first allocated to fee, then to the interest, finally to the tax payable. So this is how you actually adjust the self-assessment tax. So that's what they say. Then you need to calculate this in this order only, whatever you're paid. Subsequently, let's say you're paying another 2,200. So this 2,200 will be adjusted directly towards this tax liability. So when you're paying an amount, first preference is to 234F, that is a late fee, then to interest under ABC, then to your tax portion. So that is how the order that which you actually adjust. So that is all self-assessment tax is all about. So after this, the self-assessment tax, you file your return of income saying that this is my assessed tax. I've already paid all the taxes. This is my return of income. So that's how I filed the return of income. So we'll answer some questions. Namrata, how will the hotel know that it requests to obtain a PAN? Basically, if they're collecting cash more than 50,000, hotel is not supposed to collect without getting the PAN. So that is what it is about. So it is mandatory that the hotel obtains a PAN from a person whom they are collecting 50,000. So, but if the person says, if the person who has to give the PAN says, see, my total income is not that much, 2.5 lakhs, it's a declaration. So the declaration may be correct, may be wrong. We are not getting into that. As a person, if I say my income is going to be less than 2.5 lakhs, I'll certify that the information I have provided is true and fair to my knowledge. So whatever I know, my income is less than 2.5 lakhs. That's why I have not obtained a PAN. So that declaration should be given. Can minor obtain a PAN without skilled income? Yes, everyone can obtain a PAN. So there is no restriction. But of course, in the PAN application, it will ask you a question, what is the nature of income you are actually earning? You can always say it is income from other sources. No one is going to question you. So a minor can apply a PAN even in that case. So that's what. See, as far as this hotel goes, a declaration may be obtained. It's a self-declaration. So whatever I give, it is only my duty. I am saying that my income is less than 2.5 lakhs, so I need not obtain a PAN. So in that case, be it hotel or anyone cannot question me. They cannot question me. Prove me that your income is less than 2.5 lakhs. They can't do that. As long as I give a declaration, it is okay. If any individual filed ITR, how income not more than 50,000, 5 lakhs or fewer of filing it, he didn't file. So what happens? That's what, see, we discussed this earlier. A person having income more than few lakhs, that is, let's say he's been filing return for 10 lakhs, suddenly he's not required to file a return. It's okay. Probably you'll get a notice saying that why have you not filed a return of income? You can always currently, I'll not confuse with the reality. See, basically, let's say assessment year 17, 18, 18, 19, 20, 21, 21, 22, 19, 20, 20, 21, 21, 22. Okay. Now here it's income of 6 lakhs. Here it is 750. Here it is 820. Here it is 960. Okay. Now this year he has become a non-resident. He has zero income. Okay. So now he would have filed return. Here he need not require file return. He need not require to file a return because he is not a resident in India. He does not have any income. Generally, it happens in IT sectors, right? So you'll be working in India. Suddenly, they'll ask you to go and get settled in abroad. You will go. From that period onwards, you will not be required to file a return of income because you become a non-resident. So once you become a non-resident, you need not file a return. So it is okay. It is completely okay of you not filing a return. If the next year, that is 22, 23, again comes back to India and receives 10,20,000 as salary, he will file his return of income. So that's the purpose. The calculation is for every year, not for anything else. Whether CA can authorize a return? No, CA cannot authorize a return. So typically, there is this authorized person which the company refers to or someone refers to is a person for whom there is a power of attorney. So as a practicing chartered accountant, no, you cannot be having a power of attorney. Rather than saying a CA, the power of attorney will not be given to you because you're a chartered accountant. It is given to you as a person only. So if you ask me whether as a chartered accountant you can be authorized person, not in the capacity of chartered accountant, not in the capacity of chartered accountant. What is power of attorney? Power of attorney. See, power of attorney is basically giving power act on someone's behalf. So that is basically the power of attorney. So let's say if A is giving power to B, saying that you can sell property on my behalf. So this is power. Similarly, for income tax purposes, authorized to sign. A Limited says, I authorize B to sign income tax returns. So this is power. So they're giving a power. Namrata, what if we are using EVC? Yes, as I told you, in this world of digital signatures and this electronic verification and all, the concept of someone else signing is reduced. It's become almost nothing. So currently, since it's through digital signatures and through electronic verification codes, the concept of someone else filing in power of attorney or something else is generally not applicable. If it's about a designated partner, they did not give authority to anyone. If it's designated partner cannot sign, it will be a regular partner. The question is, designated partner, to whom should a designated partner give authority? If it's a designated partner, he need not give authority to anyone, because in case of LLP, if designated partner is not signing, other partners can sign. Sushil Kumar, foreign tax credit, I'll just remove it in my presentation. It is basically for final. It is not for intermediate, so we'll leave it so as it is. Where did I talk about 2000? Pandava, this 2200 should be paid only. Just for the sake of differentiating, I said, you will have to file a return after paying your complete taxes only, unless you are disputing. Okay, I'll just write this down. 100% of tax must be paid before filing return. Exception, dispute in some income. Only when you have a dispute in some particular thing, then it is applicable. Otherwise, you must pay the entire taxes. So for this example, whichever I discussed here, it is only for our understanding to calculate this, to calculate the order in which self-assessment tax is adjusted. Otherwise, this should be paid in that year itself, same year. How did you get 20%? Okay, I'll repeat this order of self-assessment. I'll repeat the order of the self-assessment. The self-assessment is typically, if my tax payable is 30,000, okay, as of 31st March 2022. So in this situation, what happens is the 31st March 2022, I will have to pay this 30,000, right? Whatever 30,000 that I'm talking about, I'll have to pay in that year before filing return of income. I need to pay this 30,000. This 30,000, there is an order. So let's say my 234F was 5,000. My interest was 3,000. Now, let's say I'm making my first payment on 10th April 22. Here, when I'm making, let's say I'm making 20,000. This 20,000 set off will be first for 234F plus interest plus balance. Okay, so 234F is 5,000, 3,000 is interest, then balance of 12,000 will be for this. Second payment I'll be making on, let's say, 10th May or 18th May 22. So this is, I'll have to pay 10,000. This 10,000, this is nil, so directly it'll go to 10,000. This is just to allocation of the self-assessment tax, nothing to do with paying later. So it is only allocation of self-assessment tax. Whether you need to know what form is applicable for each person, I don't think it is part of syllabus, so we'll leave it there. $234ABC, a revision basically. See, 234A, I told you it is 1% for delayed filing. 234B is for 1% per month. Everything is per month. So 1% per month for delayed payment. 234C is 1%. It's actually, we'll say, for delayed advance tax. Okay, so that's the provision as far as this delayed advance tax for this 234C. Now in this 234C, we said first quarter, 15th June, you need to pay 15%, at least 12%. So this is at least, it is if not 3% interest. Then 15th September, 45%, at least 36%, if not 3%. 15th December, 75%, same 75%, 3%. 15th March, 100%, 100%, 1%. So typically 10% will be the total interest. When I say 10% for 10 months, rather I will call it as 10% is levied across this period for this respective period. So that is how 234C is calculated. Repeated question on this deduction. See, 1,50,000, I have very clearly given a separate slide itself. There is a section called 80CCE, which restricts your deductions, overall restrictions. There it says 80C plus 80CCC plus 80CCD plus 1. So all this put together is 1,50,000. This is provided in 80CCE. I request you to please go through that session itself rather than repeating the questions here. So typically, the one thing that I'll do is that the MCQ file, I'll do it in the next session. For the rest of thing, anything related to AC, 80CCD, go back to the session. Whatever is being asked here is being said already in the session. So please go through that session itself rather than repeating it here. There are separate slides for all these explanations. So you can go through that very well and understand it. How we got 10,20,000 in assessment year 22-23? Where did I write 10,20,000? I don't know where I've specified 10,20,000. Oh, this return filing. That was just rough numbers. These are just assumption numbers. Whatever I've given here is all assumption. I'm just saying there are incomes. 1 year alone is not earning income. So for that year, he need not file return of income. So for every year for which he has actually for every year where your return is actually having income more than this the basic exemption limit, you need to file your income tax act. Okay. With that, completed my session. The MCQs alone, I'll upload it separately in the MCQ area. So I'll upload the MCQs for TDS and this separately. So as far as this, the notes and other thing, I'll upload it right away. So with that, I'm done with my session. Thank you for the wonderful session. In tomorrow's session, we'll solve some of the problems of computation and understand as a wholesome approach for your exams. So thank you.